everyone doing it, you know? And
Mhm.
so I don't know if you've heard that yet. I hear it
Yeah.
about every day, but what would be your response to that?
And it's usually got an element of sort of not distrust or sort of, oh, hold on now, wait a minute now, and so it's the two edges of the sword that come with wanting to protect something. In order to protect something, anything, a great business idea, intellectual property with a patent, a transaction type, which in this case has certain legal and other protections, so that no one importantly can take the really good idea and go basically duplicate it. That's important. But more importantly, take the good idea and mess it up.
Mm-hmm.
So in a strange way, when you are protecting anything, right, it also places some limitations on its broad use. Not everybody can see it or access it. It's not perfectly transparent or out floating around on the internet. We expect everything to be Googleable, right? Well, this isn't Googleable, at least not in terms of the detail, because there's no way to do that and make it that broadly available without protecting it to make sure it stays, it's done right. Look, we have this conversation about the asset portfolio, where the nature of it is that the investments must perform within a range. And the range is fairly generous and there's some flexibility. But the point is, all of the parts, the legal structure, the tax elements, deferment elements, and the investment elements, they all have to work together in harmony, and they all have to perform. If any one of them breaks, then we have a problem, and it's my reputation, and it's your reputation, it's Bob Binkley's reputation, and these are serious folks. I think of myself as a fairly serious person. So my entire life developing my credibility and my reputation, and I'm not about to throw it away. So in a strange way, the activity of protecting that sanctity results in the fact that it isn't as widely known as you otherwise think it might be. That's actually a good thing.
Right, it is actually a good thing, right? And it's why it's been 25 years now plus, thousands of closes, billions under management, over a dozen no change successful IRS audits, and because it's just an installment sale, right? Now we're created with a third party unrelated trustee, which is what the services we provide here at Capital Gains Tax Solutions. But it takes a team of professionals to execute this in a way that that maintains the law of IRC 453. And that is that's important to mention. By the way, we also think and believe and would hope to think that the just the same fact that you can diversify the wealth, the IRS also says that could think and would believe that you're going to diversify the taxes being paid, right? Because this is truly deferral. This isn't avoidance, right? What we're saying is they're actually locking in the gain, versus the 1031 exchange where it's, right as it stands right now, it's kind of, you can drop into your swap or swap into your drop. And in 2008, when things were not diversified, and if you're trading one single asset for another single asset, taking on a bunch of debt, guess what? Things can stop, and all of a sudden that gain gets wiped out. And guess who else who doesn't get the tax on that? The IRS. Whereas in the Deferred Sales Trust, we're taking that gain and we're kind of locking it in and we're preserving it, right? And we're going to spread it across potentially 100 different investments in 100 different companies, right? From different countries, different areas, different, it can be real estate, it can be stocks, right? It could be hard money lending. It can be a number of things. And therefore it increases the chances of when you receive payment, you'll pay tax. Also, by the way, it gets new property taxes, right? Because the property sells. The agent gets the listing. He has to pay tax on the commission. So it's actually a win-win-win. Meet myself. Hey, welcome everybody. I'm so excited for everyone to be here. My name is Brett Swarts, and we are on another mastermind for cryptocurrency and the Deferred Sales Trust. We're talking all things Bitcoin capital gains tax deferral, real estate tax deferral, business tax deferral on highly appreciated assets. And really what we found is that most high net worth individuals and the people that help them, whether you're the business broker, the luxury realtor, the financial advisor, the commercial real estate broker, the M&A advisor, all of us, right? I'm a commercial real estate broker by trade. Our clients and or yourself, you guys struggle with capital gains tax when it comes to the sale of highly appreciated assets. And we use the Deferred Sales Trust to create that tax deferral liquidity diversification, and the ability to invest back in at optimal timing into assets that make sense for you when it makes sense for you, or maybe never invest back in because you don't want to be active anymore. You want to be passive. You want to retire. You want to get some of that time and energy back. You want to be able to get location freedom. You want to be done with that business or done with that real estate asset. And so we're here to make it simple. We're here to answer your questions. And we're here to hopefully unlock what's possible with the Deferred Sales Trust. And hopefully you caught that in that video. And that gentleman, by the way, is a gentleman named David Young. And he's part of the inner circle here with Capital Gains Tax Solutions in the Deferred Sales Trust. And he comes from a very, very methodical background of financial advising and seeing a lot of things for a lot of years. And was approached with the Deferred Sales Trust just a couple of years ago. And so what he was talking about is the nature of the proprietary nature and maybe why it's still not as well known, because it's protected, right? And it is something that has been tried and true, something that he's put his name on. Obviously, we've put our name on, and so many others have. But it's still hard to fully get really comfortable with when you haven't heard about it before. And so that's part of why we're here right now. And we would encourage you, if you're listening to this, to jump on, go to capitalgainstaxsolutions.com and invite somebody and register for free for this mastermind and come back and ask those tough questions. And we're happy to answer those to get you comfortable so that you don't have to pay that tax. And today we're going to talk about a person who said no and a person who said yes, which and we're going to walk through those deal stories and hopefully also give you guys some insights. And so I'm excited to have folks in the room. I see Rebecca. I see Mitch. I also, let's see here if I can get my thing to open back up. Sometimes my computer's a little bit slow. So when we're streaming live everywhere. So let me just close a couple other things. But that being said, I can't see everyone else right now, but I will in a minute. We're going to dive into the deal close story of the week. And this deal close story of the week. And in fact, I'll ask the guests first. Mitch or Rebecca, would you guys like to start with the person who said no or the person who said yes? Which one would you like to start with?
I'm thinking the person who said no.
Okay.
All
right.
Yeah.
Let's start with that one. Okay, so this gentleman was selling a business, and he's still selling the business. And he is looking at the Deferred Sales Trust for the first time. His business broker brought him the Deferred Sales Trust idea. This gentleman's been in the roofing business for many years, and he's worked a lot of hours, and it's about a $3 million sale, a zero basis, and he's looking at about $1 million tax, maybe $1.2 million, $1.3 million. So it's actually pretty substantial. So this is actually local here in Sacramento. And so I got a call, and the business broker said, hey, I've been following you, been seeing the content. I've heard of the Deferred Sales Trust in the past, but I've never done one or have any clients do one. But you seem like you're the authority on this. And so I like you to sit down with my clients. I was like, oh, sweet. That's like the best one, So we go down and we sit locally in Roseville. We sit down face to face and we dig into the Deferred Sales Trust and do his business, why he's selling. He's looking to retire. He says he's just nonstop, constantly busy. And so walk through it, pretty straightforward. He pretty much said, that makes sense. I feel like I want to do it. Okay, good. What do you need? Well, let's move to the next step. So we moved to the tax attorney call. We did that. Things are going good. Yep, everything sounds good. And then about a week goes by, and I get a call from the business broker, and he's like, yeah, Tony talked to somebody. I think it's a CPA, and his CPA told him not to do it. I'm like, okay, well, tell me more about that. What was his concerns? He didn't really go into specifics. He just said that Tony just said that the CPA said that he wouldn't do it, so he didn't do it. I'm like, all right, well, would Tony consider having a CPA come on and talk with us to go through it and go, and he goes, I'm not sure, we'll let you know by Monday, for one way or the other for sure. But, we're looking to go into contract. In fact, we have the deal all ready to go. We only have 30 days to, really to do this deal. I said, all right. I said, no problem. I go, we're here. Just let him know that we invite the CPA on to come on and bring his questions, whatever he may have. And, so I waited till Monday. And in fact, in the meantime, I sent an email with some references
as well as shared the Cal Garvin story, which is really powerful. Remember, his wife was the Treasury attorney, worked for the Secretary of the Treasury, and actually was at times working with the IRS for businesses and other folks that were doing things they shouldn't be doing with taxes. And he was a financial advisor for 35 years, selling his multi-million-dollar business. And this happened 15 years ago. And so I gave him that person. And all I know is Tony's really, really, really busy. And even the business broker is saying, hey, like, he's really, really, really busy. And so I don't know if he's going to get around to calling these folks or whatnot. I'm like, all right, well, it's in his plate there. It's a $1.3 million, right? Tax liability. And you can bring the CPA on. So I gave him everything. And Monday came around, and he gave me the email from the business broker, said he's decided not to do it. And that was really it. And so my plan is to give him a call today to try to dig in a little bit more to what the CPA actually said. I'm really curious if the CPA would even be open to a call. I don't even know. It's frustrating because what we found that if the CPA doesn't come to the call, or the actual person doesn't say, look, I'll pay for your time, please come on the call and let's have a discussion. Let's have a debate. Let's go through it. Let's see what are the challenges, and then let's see if they can uncover those things. I think sometimes what the CPA thinks is, oh no, I'm going to be on the hook for this if I say yes. And the way we structure the Deferred Sales Trust is that the CPA tax attorney who created it, they're the ones who provide the lifetime audit defense. So it's not actually even their CPA, right? However, what the challenge is for someone who's a business owner, their challenge is, well, I've been trusting my CPA for 20 or 30 years or whatever, right? They've helped me do all my tax returns, build my wealth, right? Preserve or defer tax, or all these different things for different strategies. So that know, like, and trust factor is very high with the CPA. So what their opinion is carries a lot of weight, and you can't blame them. The part where I really challenge everyone who's listening to this on this story is make sure the CPA at least comes to the table to make the discussion, like an hour of time. And what we found is that 9 out of 10, if the CPA had actually come to the table, or another way to put it is, it's nice to have the CPA in the passenger seat as you're going on this deferred sales trust journey, versus in a car in the rear view mirror. Because part of the other challenge is if they're not going along the journey of learning about it. And we probably had, I'd say, 3 hours of like multiple meetings and discussions, perhaps even before the CPA came in. And so what I'm learning through the process is, hey, is there a trusted person that you need to come alongside of you? And if so, let's bring them in right now, rather than waiting and feeling like they having to play this catch up, right? And or the client's having to communicate what they're learning for the first time, and all the CPA, their red flags are coming up because, again, they're not maybe communicating well. I don't even know. I'm not even sure what the CPA's objection is. I'm sort of just trying to think through what happened. However, if I believe, and I'm still going to try, by the way, like the deal doesn't close for 30 days, so I'm going to give it another shot. I'm going to say, hey, you know what? Bring your CPA to a call. If he still says no, totally respect that. But if there's a chance he says yes, that's a $1.3 million hour conversation. So would you please bring him at least to a call and have him bring his objections up and see if we can flesh that out. So I'm gonna pause there. Rebecca, any thoughts or questions on that one?
I think you made a really good point, Brett, that making sure that people do their due diligence and bring all of their people they know, like, and trust, that's part of their crowd, into the conversation while learning through it. Because the business owner may not think of all the questions. Their financial advisor or their CPA might think of something that they hadn't even thought about, even in an hour-long conversation. So it's great to have them in that initial process, because there's always questions. I know I do this and then get off the phone and then, oh my gosh, I had 10 other questions that I forgot to ask. So yeah, I agree.
Yeah, and I think I also want to dig on that a little, or pull out a little more wisdom there too, that sometimes the CPA could feel like, oh no, these guys are against me, right? Or they're trying to take my business or take my client, because he doesn't know us, right? And
Right.
all he knows is that this person's meeting with this other tax professional person, and maybe maybe it could be a little bit embarrassed because they didn't know it, right? Or they're not providing a solution, right? B, they think maybe we're maybe taking competition, but we're not taking the personal tax return, just so you know. So any CPA is looking, we're not looking to take any of your business. In fact, we're looking to enhance your business. We work with CPAs across the nation. We're niche focused on the deferred sales trust aspects of capital gains tax deferral. So yeah, so I'm gonna call the business owner. I'm gonna ask him, see if he'd even give me the call, and I just say, look, it's a $1 million thing here, and so would you give me a shot? We spent a couple hours just to hear him out for a couple minutes and see if we can address any of those things. I don't want to sell you anything. I just want to have clarity. You don't have to have agreement, but just clarity on what it is that his concern was, and maybe try to alleviate that. Because in the past, we have seen, in fact, we work with a 55-year-old CPA firm out of Bakersfield, right? And these guys are the most respected, amazing CPA firm, and they've been working with the structure for 20 years. It's like, would the CPA at least talk to those guys? Or would they, someone that's third party, unrelated, So I don't know. So that's their thoughts. Mitch, any other thoughts on that? What do you think on that story?
Yeah. I can see where it's a challenge for the client wanting to bring their CPA in. It might feel for the client that they might be hurting the CPA and their relationship, when in reality, what's happening is you're creating a strategic partnership with the CPA for the mutual benefit of the client. And I think that's what has to come to the forefront of the conversation, is to make sure that it's somehow communicated to the client. And I ran into this with a prospective contact where they said, look, we're not interested. We've got everything covered with our current CPA relationship. And so I really have a hard time overcoming that hurdle myself. And it's not a matter of two conflicting relationships. What we're doing is we're the two non-competitive professionals uniting for the benefit of the client. We're helping each other help the client. The client's interest has to be first.
Makes sense.
So that's, we're looking to create a harmonious relationship, and in the long run, it will create a better relationship with your CPA, because they're going to be doing your trust taxes for the next 10, 20, 30 years.
Not the trust taxes, but they'll do the personal tax return, right? Because they'll get a 1099 and the trust will file its own tax return. We do have that separate, just to clarify. But they'll be able to review and be a part of the conversation to understand it, if that makes sense.
Well, maybe there's something I don't understand, and that's why I'm glad we have these classes.
Yeah.
So I understand that that the tax law firm that does the trust is requiring for the first year's tax return to be done by them. But I thought that the client could have, the seller could have their own CPA do the trust returns after the first year.
No. So yeah, completely off. So the personal tax returns always stays with their personal CPA. The trust tax returns is always with, we use a group, they're a national company that does all of the trust tax returns. That's completely separate. Yeah. So remember, the trust itself is not owned by the person. They are lending the funds to the trust, right? That's how this thing works. So it's actually even more important that it is separate, right? So it's not deemed, just like there's not a related party as a trustee, right? Or a related party as even a financial advisor. We want to keep all of those things separate. So it's actually in their better interest to have it separate. But that's kind of another conversation. But that being said, so that's the negative deal, right? So far, maybe we'll bring it back to life. I don't know. I'm not sure. I just know, I think about 1.3 million, about 40% being just gone forever, right? And I just want to know that CPA, whatever fear, whatever big thing, whatever big challenge, that you've spent $1.3 million of your time, blood, sweat, and tears of energy to push back and see if there's a creative way to alleviate those concerns or those fears, right? I don't know, right? Obviously, it pains me. The worst is when we get calls from people who say, oh, I just sold last week or a month ago, and I paid 1.3 million of tax. Can you do anything about it? Right? And now we go, well, we can throw you in an opportunity zone if it's been within 180 days from the time you close, but that's kind of separate. Those are kind of harder to find. But the deferred sales trust got to be set up prior to, unless it's a 1031, then we can save a failed 1031 exchange. But those are some of the thoughts there. I do want to invite Mr. Jake Miller, if you can hear me, and Mr. Pierce in. Jake Miller, how are you doing? Looks like his audio is still connecting. Jake, how are you today? Are you at the great Mexico place of amazingness again today? What are you doing?
Yes, I'm in a different side of Mexico. Now I'm on the East Coast in the Yucatan. A lot of great things over here, not just work, but also plenty of sunshine and clear water and amazing things. And I apologize. Yesterday, my internet and everything was fantastic and wonderful. And today, a few difficulties, but I've been listening in on the conversation so far and some great discussion about collaborating with other professionals. And I like it because that's, again, I think somebody mentioned the comment that we're all in this collaborating so that there's a better outcome for the client. And that's what we do here with the Deferred Sales Trust.
Absolutely. So now let's move into the positive deal story. That was maybe one of the hardest deals ever. And this one is exciting. And I'm happy to share it because honestly, like I thought it was dead probably 20 times. All right. So I think I may have mentioned it. We were working on it like a few masterminds back, but let me try to paint this story here. About a year and a half ago, I got a call from a realtor out in Massachusetts, and they're in the Lexington area, and they sell higher end homes. And it's a couple, and he does some commercial as well, and so he's learning about the Deferred Sales Trust, and he goes, you know what, Brett, I really love this thing. I could see us using it for our house in the future. I'm like, cool, that sounds good. I'm happy to help. So fast forward about a year after that first conversation, he calls me. He's like, all right, Brett, it's happening. I'm like, what's happening? His name is Tom. I'm like, Tom, what's going on? And I'm at the airport. I'm about to fly to New York to be with my wife, away from the kids for an entire week. We're all excited. And we're about 5 minutes from boarding, and it's going to close next week. And I'm like, what's closing next week? He goes, our house. I'm like, and we have all this tax. I'm like, oh my gosh, okay, tell me about it. He goes, well, what's the value? Well, we're selling for about 2.1. I go, what's your basis? He goes, well, about 570,000. I'm like, but you're married. He goes, yeah, I lived there the last 5 years. I'm like, okay. So we add another 500,000 to that. So we're about $1 million basis or so. And I said, what's your debt? About 1.68. So he has a substantial amount of debt. And I said, you know what? You have a few things going on here, right? But you do have a big tax, and your tax is going to be somewhere around $250,000. And I said, you're going to have to, if we're going to work this, it's going to have to be quick, and it's going to have to be succinct, but it's going to take a miracle because your escrow people don't know us, and you're about ready to close. He's like, yeah, has a buyer removed all contingencies? He's like, well, there's still maybe a little bit left. I'm like, well, find out for sure. So this began the process. And so they pushed the red button to try to get everyone to accommodate them. And literally like weeks start to go by. I'm signing notaries on random streets in New York. I'm having to break away from my wife to try to sign papers and try to get the deal closed. Then their attorneys are involved, and their other attorneys involved, and then they say they're not going to close, they're not going to cooperate. They are going to cooperate. And we went through this whole song and dance. Basically, I mean, that was October when I went, first week of October. And then they went to court. Oh, and then the actual buyers, they said they're showing up. Everything is in their van. They're ready to move in. And they're like, well, we're not selling until you guys cooperate. And they're like, no, they're ready to move in. They're living out of their, like basically the U-Haul out of a hotel, right? They're like, this is, they should close. And so I couldn't blame the buyers partly because they're like, yeah, you guys kind of threw it on them last minute. But at the same time, the sellers were saying, it doesn't affect you at all, just cooperate. And the buyers actually were cool with it, which was interesting. Like they didn't really care. They're like, they just want to get into our house and close on the title free and clear, which was totally fine. It was actually like another attorney that seemed to just, no matter what he would ask of us, it was always, something else needs to happen. Something else needs to happen. Or there's a reason that doesn't work, or you need to adjust this. And I won't go into all those little details, but we kept doing all the things. And then he'd always say, he'd just kind of keep moving the goalpost on us. And we're like, we keep delivering, but you keep saying no, whatever excuse. And so that's got the sellers upset. to say it's not the buyers and sellers want to do it. It's the people in between who are trying to make objections that we're like, fine, move the escrow to another escrow company, right? Let's do these things that we have escrow companies ready to go in Massachusetts that have done these before, that have no problem with the things that you guys are coming up with as problems. But they kept saying, no, 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 no. Anyways, they're racking up attorney fees, and now they're living out in a hotel. Fast forward, they went to court in front of a judge, and like I keep getting emails, and there's like the email changes like, I don't know, like 100 emails. I'm like, oh my gosh. I'm like, I don't know. I'm not an attorney. Like, you guys go figure this thing out. Our attorneys are helping out, though. They're giving them some good information. Well, anyways, all of a sudden I get a call January 1st, like, we're closing. I'm like, really? I'm like, yeah, you said that like 15 times. Like, yeah. And so they closed just 2 days ago, and the funds hit the account, and they're really happy. And part of it is because they have a huge tax liability, and this is their retirement. So this is a big deal for them. So I'm going to pause there, see if there's any questions from anybody or thoughts on that deal.
Yeah, I have a question. Hey guys, so how if the buyers or if the seller, the buyers remove the contingencies, is it done? Like, is there any way to get it back, or is it just like they're moving forward and it's done?
So had the buyers removed all contingencies, which they had not, okay, the question was whether or not they're going to cooperate. And again, they would. And they actually signed the document before the contingency removed that they were going to cooperate with the Deferred Sales Trust. And so that was the thing. The sellers were like, hey, the buyer signed it. We're good. And then the attorney tried to say, nah, you guys were already, they weren't fighting that. They just didn't want to cooperate with the title. Like it's like they couldn't understand how to do like the deeding or do it in a way that they felt like basically the title insurance would be cleared. So to answer your question, no, if they had all of the contingencies been removed, then it's too late for a primary home. It's too late for a business sale, right? If you've already closed on cryptocurrency and you've taken the cash, you've sold the Bitcoin to a different coin, you swapped it, and or you took the Bitcoin and you just sold it to cash, it's taxable, right? It's over. The only time that if the buyer has removed all contingencies that we can still do a deferred sales trust is if it's an investment property and the funds have been sent to a qualified intermediary, which buys us another 45 or 180 days. And the key here, Pierce, is that the funds haven't been constructively or actually received by the client. They're with the qualified intermediary, right? But since the only thing that qualifies for a 1031 is investment real estate, all of these other assets, such as primary homes like this one in Lexington, Massachusetts, we had to make sure the buyer had a contingency remaining. Does that make sense, Pierce?
Yeah, it does. This particular thing that I'm contemplating is a plot of land. So
it's investment property or primary home land? I mean, I guess it must be investment property, right?
I mean, they currently live in a house right now, so it's.
But it's not on the same parcel, right? It's a separate parcel.
It's a separate parcel.
Yeah. Okay. So it's fine then. Yep. You could do it with that. They just have to send it to a qualified intermediary.
And you could switch escrow accounts if the escrow account's not cooperating, like mid-escrow.
Yeah. They don't like to do that, right? Because they're not going to get paid, and it's a whole hassle for them.
Yeah.
But it's like calling a bank, and they're like, hey, reverse that $35 fee. And they're like, no. And you're like,
right.
Yes. And they're like, no. And you're like, let me talk to your manager. And they're like, okay. Right? I mean, that's the kind of thing, right? So they're going to tell you no, of course. We can't do that. That can't be done. And you're like, really? Are you sure? You've never actually transferred an escrow to another escrow company? Well, yeah, but the answer is I don't want to do this. We're not going to get paid, or we'll charge you. I'm like, fine, I'll pay you whatever you're going to get paid, and then transfer it because I got a tax of $1 million, right, or $500,000 or $5 million. So cooperate with me, please, because it doesn't expect you guys. We're not asking you to defend us in IRS tax court, right? We're just asking you to cooperate with this deferred sales trust. So yeah, so that absolutely. But here's the key. We've done more and more and more. And here's interesting. We've done deals with just about every title company. But just because you've done one in one state or one location doesn't mean that the other ones know, right? And so oftentimes it's just about connecting them with people inside of their same title company who've already done this. And then again, the know, like, and trust factor goes way up. they actually share the documents and they walk them through the boxes to check and how to report it. Then they go, oh, and then they relax and they're like, wow. And then they open up, right? And then they actually bring more clients and they start doing more deals with us. So that's part of what we're trying to make it a household name and make it very simple for everybody. That make sense, Pierce? I think as a yes.
Yes.
All right. What other questions? So now I'm going to open up just for general frequently asked questions. I have a couple other topics too to cover. If there's no frequently asked questions right now, or general questions, or live deal stories that we can walk through from anybody, anything from Jake, anything from Rebecca, anything from Mitch, and then anything from Pierce. So we'll start with Jake. Jake, any live deals or any things that we could add today?
One thing I was going to comment about the success story that you shared is that, you know, you hung through all of the pain that this particular attorney, you know, not to throw all the blame on him or anything like that, but where everybody else was willing and he continually wanted more and more things and some documentation and et cetera. And it took a very long time. So not that every case is like this, but you are definitely willing, as long as things are progressing and moving forward and people have intent to do it, so to speak. I just want to express some gratitude with some other clients that they have definitely expressed a high degree of appreciation for you as a trustee in your patience and moving things forward. Sometimes when there's not an exact timetable for when things happen, because we're waiting on buyers and sellers and negotiating of terms, and we're waiting on all these variables, right?
Or crypto prices to go from $1 to $10 a coin, right?
Yes.
For one of the big ones Jake and I are working with right now, it's an XRP client. And we're like, hey, no worries, take your time, right, when the price is there. But yeah, there's certain targets. But keep going, Jake. I appreciate all that.
No, I mean, I think from a professional service level, what you're providing people before they're even technically clients and everything else is an example of the type of service that they'll receive ongoing while maintaining and assisting with their trust going forward. And I think that's just key for people to realize that we definitely are willing to put forward and continue to provide a high degree of service and effort and work just to make this happen for them, because it as in the example of what you mentioned, I mean, this is their retirement. This is what they want to live off of for the next forever, right? And so it's sometimes for many of these clients, maybe not all of them, but for several of them, this is the biggest transaction that they'll have during their entire life. And that's why a whole team of us get together to make sure that the transaction happens in the way that is most efficient, tax effective for them, and that it accomplishes their goals. So, you know, out of your success story that you shared, I just wanted to highlight some of the items that we often overlook. And, you know, I mean, you're a humble guy and you don't toot your own horn very much. So I figured I'd comment on a few things that my clients are continuously telling me about you.
Thank you, Jake. I appreciate that. I'm looking forward to seeing you in Colorado along with Pierce, by the way, and I'm hoping Mitch gets there. Mitch officially at the Best Ever Real Estate Conference is happening February 20 something. I'll have that here in a minute. And it's going to be awesome. Commercial real estate, I'll be speaking on stage, but I'll get to see Jake in person again. And Pierce is going to fly out. He just committed to it, so that's going to be cool. Of course, Rebecca, you're invited as well. If you want to fly to Colorado, it's going to be really a great time. But commercial real estate, syndication, deferred sales trust, all of those types of things. And then I'm just like I feel like I'm the little guy. Like there's like really some big guys that are going to be speaking that are going to be really cool. That being said, I'll move it over to Rebecca. Any live deal stories, any frequently asked questions, anything on your mind at all that we could help with today?
No live deal stories, but actually when you were talking about the deal close story, the good one, what really stuck with me was that you've done deals in not only California where you're based, but across the country. And I know that in states like New York, it sounds like in Connecticut or Massachusetts that they use attorneys rather than escrow and title people. You have to learn all the nuances of each different state and community that you're in. So that's tough because there's a lot to learn. I mean, California is, it's beast in itself, but, to have to know all 50 states or even, different countries. knowing that kind of stuff too. So
Yeah, great point. And the deferred sales trust tax returns with the 25 years, thousands of closes, billions under management, right? It's been all 50 states, and just about any type of asset you can think of: public, private stock, commercial property, primary home, luxury property, business sale, LLC, S corp, C corp, partnerships, you name it, artwork, collectibles, fancy cars, like on and on and on and on it goes. And so they've seen just about everything under the sun, and then done it in all the states. And then that's where we lean on them to be the attorneys, to talk with the attorneys. Also mentioned these clients were willing to fight, right? They were fighters, and I loved it, right? They call me. I mean, I was like, Tom, you're putting me in a tough position. Like, we got like, you're gonna get ready for a fight, because these people are not going to lay down easy. You're laying on them the last minute. And he said, I'm willing to fight. I'm like, all right, here we go. And like, they stuck it out, and they kept fighting, and they the attorneys and this, and I'm like, wow, well, we're here now, and we did it, but it wasn't without them being willing to fight. And at the end of the day, the clients got to own that, right? Their advisors or CPAs, we talked about us, we can try to inspire you and motivate you and educate you, but you got to realize that this is your hard-earned money, right? And either you're going to pay it to the government or you're going to defer it, and it's up to you. And the stakes are high, right? Like, this is the decision to make, and you have one chance to make this decision. And the taxes are paid forever, or they're going to be deferred for a very long time. And it could go on for multiple generations in your family, and the money can be working for you. And so that is important to know. And which on the other side too is, I think we get, well, what if the IRS does say no? Or what if my CPA was right, Brett, and I go with you and these things happen? Like, what am I facing? And this is the actual reality of it. Like, it's not fraud, right? It's the first thing, right? I mean, you're working with a professional attorney. They provide lifetime audit defense. They've been doing it for 25 years, so it's not like it's fraud. So it's not like you're looking at anything criminal. They could say, you did it wrong, therefore the tax is owed. There might be some interest and penalties, but the interesting part is the interest isn't that high. Like, it's around maybe 2, maybe 3%, and also, we're earning, typically, our goal, not a guarantee, not a promise, but 8% net of the fees on any 10-year period of time. The audit window is typically 2 to 3 years, depending on what state you're in. And anyway, so if they do audit, they do find something, like, what are you really losing here? Like, because you might actually make an arbitrage off the money because you've been delaying paying the tax. So you pay your tax plus interest, but you might actually come out ahead. And so you look at that and you go, oh yeah, you're right. It's not like it's a criminal thing. Like, people think the worst, oh no, I'm doing something different. No, it's not. And so far that's never happened, right? It's been perfect. Or they might stop it eventually. If they stop it, then it's the grandfathered in, right? Generally speaking, they've said, okay, everyone who's done it in the past, you guys are good, but moving forward, we're stopping it, right? And so that's the more likely outcome if there is actually that negative thing. So the other thing to ask your CPA and make sure they understand this, like if I do this and it's off, like, what am I really losing here? Like, can you break that down? Well, 2% interest charge and you pay the tax anyway. So you're like, okay, well, but if I say no to this, I just lose the tax and I'm out anyways. So that's why we also have that $1 million net proceeds, $1 million gain. We got to make sure the pain is big enough to even have to think about that. Now, we think you'll sleep well at night with the lifetime audit defense and the perfect track record, right? But emotionally, it takes you time to get through that and understand that and go through that. So, Jake or Pierce, or I think Jake, any points or questions on that? Does that make sense? Only questions, kind of like open-ended there. Comments, thoughts?
I know, right? No. I think it's just kind of, it's an exciting time for us to be working with people on this right now with all the discussion. I guess I wanted to throw in a little bit of extra from all the legislative discussions right now currently with the proposed tax rate increases for capital gains and for qualified dividends and for, all the different items, whether it's 1031 or what have you. Yes, there's discussion back and forth, and they've kind of went really extreme. Now they're toning it down a lot, but just the fact that they're bringing these things up points to the fact that as a country and as a nation, they're looking for ways to pay for a lot of the changes and a lot of the expenses that they're incurring right now. And one of those is obviously the capital gains tax rate and ordinary income tax rates, right? And so as things like that are changing and becoming more onerous for our clients more of a concern, the need for the deferred sales trust just increases pretty exponentially, in the sense that, sometimes people might feel like, hey, let's say 20% plus the Obama 3.8 plus the, whatever. Yeah. And, hey, if I'm in California, well, then it's just ordinary income tax, not capital gains, because they don't consider that any different, etc. So they might be considering how much they have to give up, how much they have to slice away and live off of net of taxes. And that number becomes more and more egregious with the current legislative discussions. And so, clients more and more are going to be needing something like the Deferred Sales Trust to help them have a solution to extend their dollars a little bit further, so they can reinvest net of attorney fees rather than net of taxes, and just have a bigger piece of the pie to end up with, or to continually, through deferring the need to pay the taxes now, but deferring it for the future, being able to work with more dollars in their hands right now. It's a topic of conversation that I hate to say it this way, but it definitely makes people reach out to us more often so that we can help them, because of the negative tax consequences that they're seeing that are coming with each new legislative decision in regards to capital gains and income taxes.
Very well said, Jake. Thanks for sharing that. And by the way, if you're interested and you want to learn more, you go to capitalgainstaxsolutions.com, mention this Mastermind, and you can get a one-on-one consultation with myself or one of the team members to walk you through if this scenario is good for you and fits. It just be early, right? And if one thing we learned in today's conversation is bring in your CPA early, bring in your trusted advisors early, so that we can map out, we can plan, we can adjust any challenges that you might have, overcome any false beliefs about the legality, about the track record, about the structure. And so you can make a good informed decision. That's also why we work on a conditional basis. We don't charge anything, right? Unless you do the deal and the deal actually closes. For any reason you change your mind, no problem. You don't owe us anything. So we take that pressure off. I'm going to open up for Pierce. Pierce, any questions, deal stories, or comments?
Yeah, so I do have a live deal. So this lady and their husband bought a plot of land they were going to build their dream home on. And they had 1031 into this plot. And they bought it for about 1.2. They're selling it for about 1.6. They're selling it FISBO, so there's no like real estate investor, or anything like that involved. They're selling to a builder. It's in Laguna Beach. Their capital gains tax liability is about $600,000. But what's interesting with this particular couple is that they have no children, and the wife has had multiple bouts with cancer that she's been fighting over the years and whatnot. So they never got the chance to build their dream home or whatever they want to do. So they're selling it because they basically want the money for to put away to basically live off of, should they go into a home or whatever the case may be. The other interesting thing is that they have not invested any of the money that they've earned ever into anything other than just super low CDs, and that's it. They basically just Dave Ramsey saved, lived way below their means, and they never invested in anything. And so they're very afraid to invest in anything. And so when I was talking to her about, what this was, that was her big concern. Is we don't want to invest the money. We just want it to sit in cash. So they want to defer the tax, but they don't want to invest it. And they just want to. So they were with the fees, it's too expensive for us.
Let me tell you why I agree with them. You ready?
Yeah,
which is not necessarily maybe something you want to hear on this one, right? But I think you'll understand it once I break it down. So the reason we have $1 million net proceeds and $1 million gain is per transaction minimum is because we need the pain to be big enough. In this
Right.
scenario, I heard that the basis is 1.2, and remember, you cannot depreciate land. So they bought it for 1.2.
So she depreciated. They had multiple 1031s.
Oh, so what is their adjusted basis on this then?
Their tax liability is 600,000.
Okay, the tax liability for sure is 300,000.
No, 6.
Okay, that is a little bit bigger.
It's
Okay.
600,000.
Their tax liability is 600,000.
600,000.
Oh, that's much bigger. So yeah, because you're right. Because also for those who are wondering, your basis travels when you do a 1031. So if there's
Right.
been multiple exchanges, the old basis travels, right? And so, all right, so she went to her CPA. She found out $600,000. So she's going to net about 1.5 after closing cost, right? After commissions, probably.
Well, they're selling at FSBO, so there's pretty much no realtor fees.
Okay, 1.6. So just keep it simple. 1.6.
Yeah.
Okay. So 1.6. So in this scenario, if her liability is actually it's truly $600,000, and her adjusted basis is that low, which I'm even trying to do the math on that. It seems off, Pierce. I'd actually question that because at a 1.6 sales price,
So I think they bought a house for like 300,000 and they sold it for 1.2, and then they turn around and 1031 to that 1.2 into the land.
Okay, so even if we use the $300,000 basis at 1.6, that's $1.3 million gain. And if we use, 40% just to be safe, that's only 520. So
Okay.
make sure they've really clarified their adjusted basis. But let's assume you're right. If you are correct in that it's literally $600,000 or $500,000 or $300,000, like that's huge, right? And so it's what's interesting, and the way what I would approach that is to say, great, where are you going to invest the funds after you pay $600,000 of tax? Well, Pierce, we're going to put it into a CD. Okay, so why don't we put all of it into the CD with the Deferred Sales Trust? Like, you don't have to have an 8% risk tolerance. You can have a 6.5, a 7.6, or a 5. You can even do a 4. Like, there's nothing that says you can't do lower. So you'll invest at the exact same place that you would be investing in anyways, but you'll have an extra $500,000 or $600,000 in that exact same place. Which is, let's do the fees on this. The fees are about 1.85% to 2% per year on a recurring basis. And I guess if you said it's $600,000, and again, I don't know if they're really going to invest in like 1 or 2%. The math may not work. That's $12,000 versus 600,000 at 1.85. 1.85%. It's $11,000. Yeah. So if their risk tolerance, and if they're really going to just put it in these fixed CDs at 1%, then it's probably not a good fit, right? Because the fees are going to eat up the return on the investment.
Well, can I interrupt?
Mitch, go ahead.
So just kind of like laying it out there so you have a little bit more resource. There are fixed instruments, specifically, for example, I'll throw one out. Last year, I had clients in a fixed indexed annuity, which typically I hate because they have very high commissions, very low returns, 2 to 4% on average. But there's one that is a fee-based fixed index annuity that on average last year did 7 to 8% for clients with zero risk. So they have zero downside. There's only upside, and they can average between 4 to 6% per year rate of return with a fixed instrument that has no downside risk. It's like a CD. It goes year to year. They have 100% liquidity. They can change anytime they want without a surrender charge, without an early withdrawal penalty. And so there are resources out there like that, similar to a CD, but much more upside. And there's index linked CDs too.
Yeah, that's why I really wanted to get them on the call with you guys, because I don't know those types of things. And that was like my big thing every time, I'm trying to just get her on the phone because I was like, look, just talk to the guys who are smarter than me, and she just I don't know, maybe felt like she was trying to be sold on it or something, but I was, so people are definitely,
I think the no like and trust factor comes in high here. Who is that CPA or that son or daughter who's helping them with their finances, or that financial advisor that's helping them, or like who is it that they know they can trust? And I think you asked this question, Pierce. If that person said yes, you would say yes, or who is it that you need their blessing from to make you feel really good about this, and invite that person into the conversation, Pierce. Does that make sense?
Yeah, it makes sense.
Be
They're
safe.
They're going to close. They're supposed to remove all contingencies today. So I need to get our on the phone and.
Yeah, just see if they'll throw it to a 1031 and that it costs them $1,000, but at least they'll be able to buy some more time. The other thought is you got to try to get them in person too. Are they local to you, Pierce?
Well, relatively, yeah. They're in Laguna Beach.
They give or even like a Zoom if they don't want to meet in person, right? A Zoom. I don't know if you can do that.
Yeah,
versus
I don't know. They're definitely like older. I don't know if they have the Zoom capabilities or whatnot.
It's a lot for older folks, right? Especially if they're really nervous, super conservative, super like just
right.
That makes me think that's going to be one of the hardest sales because you're new and the Deferred Sales Trust is new, and these taxes are big, and they are already in their mind going to pay the tax. Right, they're already going to write the check for $600,000, and so you come flying in like Superman, which is like amazing. Well, on our side, but from their side, it's scary. Like, where is this person taking me? And so, but doesn't mean you can't have that as a deal story for the next one to say, hey, they waited too long. They didn't bring in their CPA. They were closing last minute, and they paid $600,000 of tax, which represents like at 1.6 million. $600,000 of tax is about 37%, right? 37.5%. Which, if they look at that, if they just take that at 5%, that's an extra $30,000 a year. That's an extra $2,500 a month. But sometimes it's not even a logical conversation, Pierce. It's all emotion.
Yeah, right.
It's 10% logic, 90% emotion. And if they're not willing to even listen or open up, then it's too late. They've already written the check in their mind to the IRS.
Yeah, and I mean that's kind of how it's like sounding, but at the same time, it's part of me just like screaming, that they've printed so much money that you think your dollars are going to be worth, like you think your dollars are safe in a cash account, like they're just going to devalue, probably at a rate of 3 to 5%. So our fee of 2%, you might as well throw it into something, and just, but you can't, I don't know. You
can't force somebody. You can only lead the horse to water, right? And let them drink. So it's a part of it. The other thing is I have the California ebook, the new ebook for the deal close story. Again, when we're dealing with emotions, we don't want to go logic because logic just makes people like you're trying to sell them or you're trying to argue with them. You really want to go, let me just give you the evidence and let you absorb it. Of course, there's always going to be logic mixed into that, but with actual deal stories, people that they can relate to, that they can see and be like, oh, those folks are about our age. They're in our backyard, or they're down the street, or oh wow, And the more you can do that, and I'm building out every time I close a deal. I'm trying to do it for each state, but right now it's mostly California, and I have a lot of those. And then I'm also bringing on some more people on the podcast to share their story so you can hear it from them. But hopefully I'll give you guys some more ammunition on those things. That being said, we're up against the top of the hour here. Any last questions or comments from Mitch? What do you got? Anything else, Mitch?
No, I mean, I'll just tell you, we had a conference call yesterday with a seller and the broker and the CPA and attorney, and Brett, I was just thoroughly impressed with the breadth and depth of your knowledge. And I'm glad I'm in your corner, buddy.
Thank you, Mitch. And I appreciate you bringing that one. Yeah, that's going to be a good one. I believe they're selling a business and some real estate.
Yeah.
and we'll hopefully report back as that deal progresses and what we learn from it and what we close if it closes. But yeah, it's kind of in the early stages right now. So thank you, Mitch, for that compliment. Appreciate you.
I just feel very, very comfortable. Thanks, Brett.
Cool. Rebecca, any last questions or comments before we go to next week?
Nope, I'm all good. Thank you.
Excellent. Jake, how about you? He's in Mexico with the mojito right now. He's like, I've been checked out for at
least in the Yucatan.
20 minutes, you know?
Whatever.
By the way, Jake Muller, for those who don't know, financial advisor extraordinaire, business partner. Also, Mitch, financial advisor extraordinaire, Strategic Alliance. Pierce, business partner, luxury realtor down in the Newport Beach area. And then Rebecca, luxury realtor up in the Lake Tahoe, Truckee area. So for anyone who's wondering who these people are, these are the people who are part of this. And so I'm going to go ahead and wrap it up for everybody. I want to thank everyone for watching this live stream, this mastermind. If you have any cryptocurrency, businesses, real estate, you want to come on and just discuss it with the brain trust, right? We're kind of like the brain trust here now too, right? Dissect it, see if it's a good fit, and or you want to do it more confidential, that's cool too. Just go to capitalgainstaxsolutions.com. Either way, you can register for this mastermind, and you can also schedule a one-on-one consultation if your deal is $1 million net proceeds, $1 million gain, or you have two assets you could have, that are 500 each. The last part of that is if you have cryptocurrency, you're working with a group right now, they have 2 million and about 40 coins, but there is a way to use the Deferred Sales Trust in that scenario, even though it's multiple coins. So reach out to us. We can walk you through that. And we want to encourage you to rate, review, subscribe to the podcast, Capital Gains Tax Solutions Podcast, this YouTube channel. Give it a little thumbs up. Share it with somebody. It could literally change their life, right? It could mean hundreds of thousands to millions of dollars of capital gains tax deferred, and the cash flow of which they can live off of and their family can live off, and it can change their life. But it is at the sale, and it does take planning. So we want to encourage you to please get the word out. We so appreciate that. And we will talk to everyone again Friday, Lord willing, Friday, 10 a.m. Pacific Standard Time, 1 p.m. Eastern, right here on this live stream. Thank you, everybody, and we will talk to everybody real soon. Bye now.